The most coveted issue is Treasury securities issued by the United States government. They are the most trusted. That trust is breaking right now. And if you break that trust further by saying we can control what interest rates should do instead of what they could be doing in a natural market, now you've distorted the market even further. And the unintended consequences of that, Daniela, could be something that most people will be startled to find out. We're at an economic situation now where we don't have a lot of days left. I'm not saying it's imminent that it's next week, but the silver market's starting to shine. The gold market is moving from west to east rapidly. The banks are buying gold hand over fist, and all the signs are there. All you have to do is open up your eyes and take a look.
Central banks worldwide are poised to purchase 1,000 metric tons of gold in 2025, marking their fourth consecutive year of significant buying as they shift reserves away from dollar-denominated assets in favor of bullion, according to Metals Focus. Gold prices have surged 29% this year, reaching a record high of $3,500 per troy ounce in April, amid rising geopolitical tensions and economic uncertainties driven by President Trump's continued imposition of tariffs. DavidMorgan of the Morgan Report noted that central banks continue to amass physical gold, and countries in the global south may soon begin storing their trade surplus gold in offshore vaults in Shanghai. One expert even suggested that this trend could spark a remonetization of gold, potentially restoring its formal role in global finance. Despite the recent price rally, central bank purchases, a key demand driver, have remained steady, with first-quarter buying levels matching the quarterly average from 2022 to 2024. Metals Focus pointed out that the forces driving de-dollarization are still at work. President Trump's unpredictable policy moves, his public criticism of Jerome Powell, and a worsening U.S. fiscal outlook have further eroded confidence in the U.S. dollar and Treasury securities as safe haven assets. Central banks, which account for nearly a quarter of total gold demand and are the third largest consumers after the jewelry and physical investment sectors, are expected to reduce their 2025 purchases by 8% from last year's record high of 1,086 metric tons. In the first quarter, official reports showed that Poland, Azerbaijan, and China led the buying, with steady inflows into Iran, suggesting further purchases by the Central Bank of Iran. Notably, China's gold imports spiked dramatically, from 5 metric tons in March to 43.5 metric tons in April, highlighting growing demand. Some insiders believe this surge, along with an observable arbitrage between higher gold and silver prices on the Shanghai exchange compared to those in London and New York, reflects a deeper market shift. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
So I've got a couple things to say about that. Late last month, the Shanghai Futures Exchange announced 34 reform proposals aimed at opening China's futures markets to foreign investors and brokers. And these proposals include allowing foreign brokers and investors to trade directly without local intermediaries and accepting margin in foreign currencies such as the US dollar. Additionally, they plan to expand the warehouse network in Hong Kong, enhancing the profile of the yuan-denominated products beyond the mainland of China. The implications are China's broader strategy will enhance its influence over the commodities trade, pricing, and promote internationalization of the renminbi by facilitating direct foreign participation and expanding in its physical gold infrastructure. China aims to challenge the dominance of Western pricing benchmarks like the LBMA and the COMEX. Further, China's gold imports have surged, with gold flows via Hong Kong to maintain China's reaching 43.5 metric tons in April, significantly an increase from the 5 million in March.
Right.
So I went beyond that, and I got a couple of contacts for us, Daniela. So I contacted someone. I'm not going to give his name because he didn't have permission, but his take on it is there's an ongoing arbitrage from the Shanghai Exchange with higher gold and silver prices at the Shanghai Exchange versus LBMA and COMEX. Global central banks continue to buy physical gold as a reserve. The global south, meaning Mexico South, countries will start to use physical gold as reserves for their trade surplus with China via offshore Shanghai physical gold vaults. In other words, they'll be storing their gold in that exchange, and the results will be, in his opinion, not mine, I'm repeating what he told me, remonetization of physical gold. And the last one for you is one that is another colleague in China, speaks Chinese, reads English. So I reached out to him to ask what's going on in China in the silver market for the average citizen, because I want to know. You hear all this stuff. And he gave me a very interesting answer. He said, I asked well-connected Chinese investors to give me the facts. He stated, very few channels are currently available for ordinary Chinese investors to purchase silver. Banks offer gold accumulation plans, but not silver ones. The previously accessible paper silver products have ceased trading. The Shanghai Futures Exchange you can buy futures contracts. However, this is high risk, highly leveraged, so most investors stay away from this market. There is another market that does offer silver bricks of about 5 kilograms, commonly called plate silver in China, which mainly appears for processing enterprises and large buyers. The Chinese government does purchase silver. However, Chinese most prominent silver trader is a centrally administered state-owned enterprise. In other words, the Chinese population buys gold but not silver. So I thought that would be helpful for you.
That is really helpful. So how do you interpret that?
Well,
what's your takeaway?
Silver's the underdog. It's the underdog metal. It has been. It probably always will be. I wish that the reply of the average Chinese person be able to buy silver is, yeah, they can and they do and they are doing it. And that's not what's happening. It reminds me of your country. I mean, so many of my Canadian friends go in to buy silver at a bank, but all they get is a piece of paper that says they own silver. And many of my friends in Canada that took those pieces of paper to the bank had to settle in cash. Because, well, wait a minute, you've been storing the silver for me for 2 years. I want my silver. Well, we're sorry, we don't have it. Take a check or get out of here kind of thing. And, the silver market is so distorted from reality. It really upsets me. But, I am biased. It has been my passion for a long time. I'm a macroeconomist. I look at everything. But, silver is definitely an underdog. So to calm down, Daniela, I think it will change. I think that demand in the market, when there's a need, the market will come through. And if there's a need for Chinese to buy silver, some entrepreneur is going to say, okay. Or they'll make a mini contract in the futures market. That happened in the United States where people that couldn't afford 5,000 ounces at a time, you could buy a 1,000 ounce contract, which is much more affordable. So I could see some moves happening where there's a demand and there's a way to make money in it. I think it'll take place. So I just have to take a deep breath and see as the white metals start to march and catch up to gold, I think you'll see more products available. I think it's just the fact that there really hasn't been any demand from the Chinese population for silver. So I think that one isn't contrived. But if you go into Europe or other areas and you look back at the Silver Users Association, which was a consortium of people that use silver for industry, they basically got together to, let's say, enhance the availability of silver for their purposes only, which were non-monetary purposes. And you could verify that not only with the existence of the Users Association, but the fact that almost everywhere you want to buy silver outside of North America has got a value-added tax. So if you want to buy silver in Europe, you've got a VAT, a very stiff one, by the way, in order to buy silver. So your average citizen that wants to buy the poor man's gold walks into the coin dealer and says, well, you can buy gold with this no VAT and a slight premium, or you can buy silver with a higher premium and a VAT on top of it. What do you want to buy? Well, they walk out with gold because silver is so challenged. And that's pretty pervasive. So is that contrived? Is whatever? I think it is. And, I think the facts really speak for themselves without my opinion. So, and China, I don't think it's that way. I don't think it's because of what I outlined for Europe. I think it's more just there really hasn't been a demand. But if the demand is there, and I believe it will be, or is starting to bubble up, you might say, that someone will come up with a methodology for the average Chinese that wants to buy both precious metals will be able to do so.
DavidMorgan points out that the global economy is approaching a critical juncture. While a collapse may not be imminent, he emphasizes that the warning signs are increasingly visible. Gold continues to shift from the west to the east, and the silver market is beginning to attract renewed attention. On Friday, silver prices initially rallied following the release of U.S. employment data, which came in slightly stronger than expected. Many traders had been bracing for worse news, anticipating further economic deterioration in the United States. The stronger-than-expected figures caused some confusion in the market, creating uncertainty about the direction of silver in the short term. While silver is often supported by industrial demand, its recent momentum appears to be driven more by its broader uptrend. Technically, if silver breaks above Friday's intraday high, it could trigger further bullish movement, potentially pushing the price toward the $40 level. This aligns with the broader sentiment that both silver and gold are becoming increasingly significant amid shifting global economic dynamics and ongoing uncertainty in traditional financial markets. Let's get back to the interview.
Yeah, I mean, for anyone, buying silver here is fine. As far as, if you're going to trade it or, put on a big position, again, I would follow my own advice and get confirmation, a couple more days that this is really a breakout. And if it is, and I think it probably will be, then there's very little upside resistance. So we could go, in the high 30s or 40s fairly quickly because there is not much old longs that want to sell above this price. And people that are holding silver are going to hold on. They'll hodl. So that puts a lot of pressure to the upside because any new buying will drive it higher. Well, the geopolitical situation, the war problems, the uncertainty in the economy, the failure of the dollar, the depreciation of all currencies globally. I mean, there's numerous factors, as you know. You interview a lot of people. I watch almost all of your interviews. And, the consensus is there's a multitude of factors that are playing all together. It's synergistic in effect. So 1 + 1 = 3, that there's so many things that are actually causing people. And then, of course, I think the biggest one, if you had to say, well, what's the number one, David, I would say it's because the bond market is finally starting to show the reality of the situation. Even Jamie Dimon mentioned the bond vigilantes, which I haven't heard that expression since the 70s.
Right.
I mean, when I started in this field, the bond guys really watched the money supply figures every time they came out and the bond market react. Well, that's very passe and has been since Volcker put interest rates up to 20 and you had like a 44-year bull market in bonds, which is broken. And now bonds are really not being that coveted, but the bond market is the most important market of all. The way I interpret that is that we have had unnatural interest rates for quite some time. And that's, the zero rate interest rate policy that we had, ZIRP. And that's abnormal to have, basically free money. But that helped the Fed. It helped the debt situation because the interest on the payback of the debt at a very low interest rate. If you want a credit card of, 0.5%, you much prefer that to say a 10% interest rate. So all that was unnatural. But now that the bond vigilantes are back in town, as a metaphor, the market itself has taken much more control of the interest rates. And so the natural order is the best. In other words, for the free market, more of a laissez-faire attitude where the interest rates are determined by the buy and sell, the bid, the ask, the day-to-day interactions of all markets, where the market sets it. And I think that's what he's alluding to, is that you can go ahead and try to make it better or force it the direction it doesn't really need to go. The way it actually needs to go is higher interest rates, not lower. Why? Because the value of a dollar is deteriorating at a higher rate, a faster speed, speeding up how fast it's going lower. And because of that, interest rates need to go higher to compensate for that. Because anybody that wants to hold a dollar long term, those suckers need to be enticed by having a higher interest rate, not a lower one. So I agree with it. I hope I explained that correctly. I know I explained it correctly. I hope it's understood because it's very important for people to understand the whole world runs on credit, and that means the bond market. And the most coveted issue is Treasury securities issued by the United States government. They are the most trusted. That trust is breaking right now. And if you break that trust further by saying we can control what interest rates should do instead of what they could be doing in a natural market, now you've distorted the market even further. And the unintended consequences of that, Daniela, could be something that most people will be startled to find out. We're at an economic situation now where we don't have a lot of days left. I'm not saying it's imminent, that it's next week, but the silver market's starting to shine. The gold market is moving from west to east rapidly. The banks are buying gold hand over fist, and all the signs are there. All you have to do is open up your eyes and take a look. I mean, if we really would have bitten the bullet in 2008 and owned the facts and said, look, this is the problem, and really let the market clear on its own without intervention, which is what we just talked about, intervening in what interest rates are supposed to be because I say so, instead of the market telling us what they should be by market forces. If we were able to do that in 2008, we wouldn't be where we are in 2025. And now I really believe we have a harder way to go than we would have back then.
As bullion continues to command attention on the global stage, recent developments highlight a deepening shift in how nations view financial resilience. With consistent purchases by monetary authorities and a noticeable pivot in reserve strategy, gold's role as a cornerstone of economic stability is being reasserted. Meanwhile, silver's growing appeal amid unpredictable policy moves and macroeconomic stress adds further weight to the ongoing transformation in commodity markets. The eastward flow of precious metals and rising demand signals a fundamental change in the global balance of monetary confidence. Could this recalibration of monetary reserves and investor sentiment signal the start of a new era in which tangible assets reclaim dominance over fiat-based trust systems? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.